So this borrower closed a $4 million loan without showing any income at all. Only thing the borrower had to show was, look at my crypto account. I've got a lot of cryptocurrency in there. Lender was able to use that, use ratios, use what's called asset depletion, and say, here's your income number, you qualify. Now, that's a really simplified version of it, but I'm going to jump into it today. I'm going to show you exactly how asset depletion on cryptocurrency works, how people who own a bunch of crypto have now unlocked a new mortgage product that's going to allow them to get into real estate and the housing market. I'm Matt Duget, Matt the Mortgage Guy. I've been helping people find creative ways to finance real estate for 12 years. This crypto asset-backed asset depletion product is about as new and creative as they get in 2025. So let's jump right into it. First and foremost, let me show a quick article, quick shout out to my buddy Tyler Hodgson. He's the Executive Vice President of Growth at UMortgage. He's a buddy of mine. I know exactly how this mortgage was structured, how the borrower liquidated what he needed for the down payment in this scenario. And then in order to qualify to have an income number on this application, they just took what was in his crypto account. They gave a 50% expense factor or ratio to it because cryptocurrency is volatile, right? So you can't say, oh, I've got $10 million in this account. It should be worth at least $10 million next month or next year, and then divided that by 120 months. Now, for somebody who wants to do some quick math, if you've got $2 million sitting in a cryptocurrency account and you multiply that by 50%, that's $1 million. You take $1 million and you divide it by 120, that's going to give you $8,333. That's the monthly income that you can use as income, just the same as if you had $8,300 a month job at W-2 income. And so in the past, people with large crypto holdings couldn't get loans for sure. The only way to make this transaction happen would be to pull out all of that crypto. There's tax implications with that. There's also opportunity cost where people don't want to liquidate all that cryptocurrency, especially the ones that hold a lot of it because they believe in it and they believe it's going to increase in value over time. And so let me explain to you a little bit how it works, just so you could understand it. And I'm just going to give you the really simplified version of it. If you've got a scenario, I'd be more than happy to look at it. You can go to greatmortgagebroker.com. You can connect me and my team. You can go to mtmg.com. You can even talk to a chat bot there, ask them questions about asset depletion on cryptocurrency. But like I explained, you take whatever you own in crypto, you multiply it by 50%, and then you divide by 120 months. 120 months is continuance, they call it. Like, you're not going to run out if you had that amount withdrawn every month for 10 years. Now, that's what you use for your income number. Anybody who's been around mortgage or is qualified for a mortgage knows that mortgage is just your income versus your current debts plus the new mortgage, and your debt to income ratio's got to fit within the lender's guidelines. Now, some people might ask, how do you verify that you own this crypto? Since those who are much more involved with crypto than I am know that, you can be relatively anonymous. It's sitting in a cold wallet, and the only way to access it is the person that owns it. Well, in this case, or any case, you're likely going to liquidate some of it for your deposit or for your down payment. And so what a borrower would do is they would take the money that's sitting in cold storage, they would transfer that to an exchange like Coinbase, and then from Coinbase, you liquidate it and it goes to Chase Bank, and then from Chase Bank, you wire to title company for your down payment or for your earnest money deposit, one or another. Now, during that transaction, you see what cold wallet this is attached to, and what I do know about cryptocurrency is you can go look at that wallet. You can look at the transactions of that wallet. You can look at the amount in there. And if my example where I talked about $2 million in Bitcoin being in there, you look and you say there's $2 million of Bitcoin in that wallet. Maybe the person only took $300,000 or $400,000 and liquidated it for a down payment, but they've got $2 million still sitting in there. That is going to create that $8,333 a month in income. In the case of Tyler's loan, the person had much larger amount of crypto in there, more than enough to create income to qualify. And I believe that's called the Satoshi test. Correct me in the comments if I'm wrong, but you're just basically saying, like, here's the ledger that shows this money coming out, going to my Coinbase account and going to my Chase account, and you check Satoshi there. I don't know. I mean, I don't claim to understand it on a really deep level, but that is the gist of it. And for me, I think it's really cool because as much as people might believe in crypto, crypto and they're all in on crypto, they also want to own real estate. They understand that real estate is something that, like crypto, there's limited amounts of it, right? And so big believers in crypto is like there's only X million number of coins. It's going to continue to increase in value because it's limited supply. Real estate is also limited supply. And so they want to invest in that. They want to diversify a little bit, just like I know a bunch of high net worth engineers and minority ownership in companies, like they want to diversify outside of the stocks they have or the company ownership they have and have assets in real things like real estate. So it's going to be really cool. Let's see if there's anything else in this article. It was a $4 million loan. I believe $2 million of it came from crypto for the down payment. He had another $2 million with other sources to get it. But, you know, the lender lended $4 million basically just by looking at that ledger and saying, this person's got a lot in crypto. I think they're good for it. Here's how we got it done. The borrower had a substantial crypto assets in off-exchange XRP wallets. I think that's the cold wallet. No traditional income docs. No need to liquidate it or move it to exchange. The only thing they liquidated was what they brought for down payment. Income was calculated via asset depletion. Like I said, multiply by 50%, divide by 120. Ownership was verified via proof of Satoshi, which in my example, I talked about the money going to Coinbase and then Chase. I guess you could do small test transfers to verify control of it, where they say, hey, I want to see you transfer $27 into your Coinbase account, and I want to see that on the ledger. I want to see you transfer $42 or whatever it is. But that approach gave the underwriter enough certainty of like, yep, you have control of this wallet. So this, the rest of the millions that are sitting on there, you've got ownership to it. So yeah, it's pretty dang cool. And because it's all on the blockchain, like it's more transparent than the standard brokerage account. It's right. Like I show someone a statement from Fidelity, and one, they only get that snapshot in time of here's my Fidelity account. For all they know, the next day after I printed the account, I withdrew it all and then went to Vegas and blew it. Whereas, you know, on the blockchain, you can verify it at any time. Good point there. Yeah, even from a servicing standpoint, this sets up a new model where wallet balances could be monitored long after closing to assess financial health in real time. I mean, think about that, right? You're servicing someone's loan. They owe you $4 million. They're paying you whatever the monthly payment is. And you can, on the back end, monitor like, yep, they've still got X million in crypto. Over time, they start to liquidate that and they start to get rid of it. Like, could there even be some stop guards in place where below a certain amount, they could call the note due or they could restructure it? I don't know. I mean, that's future stuff, but it's the future and it's pretty cool to think about. So hopefully that was helpful. Let me know if you have any questions. Like all mortgage products, everybody's situation is going to be different, right? And so in these cases where for sure doing a lot of business with LendSure, I can tell you like 60% of their loans are based on exceptions. So it's like this person's got a great credit score. This person's got a large down payment. This person's got X, Y, and Z. And so we can have an exception to be able to use this source of income or that. Like it's all going to be very scenario specific for each individual. So if you have a lot of crypto and you want to see what you could do, how much you qualify for, what the calculations are going to say for how much income they'll give you on a monthly basis and how much you could buy and how much of a down payment you would have to bring, whether that's liquidate crypto or something else, I'd be happy to chat about it. It's fascinating. Go to mtmg.com, go to greatmortgagebroker.com, connect me and my team. I'd be happy to help. Thanks for watching. Let me know your thoughts on asset depletion using cryptocurrency. Pretty cool subject.